Uh, we are watching an earnings review of Lupin, and my guest today is Ramesh Swaminathan. He's the executive director and global CFO at Lupin. Ramesh, thank you for joining us on BloombergQuint. Your results came in last night, and there is a little extraordinaries which is there. Can you take us through what are the extraordinaries which you had in your in your earnings?
Yes, I can. Overall, the revenues grew, of course, 2% quarter on quarter, but year on year, we grew quite a bit, with America, of course, growing at 10.4%. It was basically, the gross margins in a general sense were more or less the same as the previous quarter. There was, of course, the impact of a couple of things: the sales mix itself and a bit of inflation which has crept in, and this is secular across various industries. This particular quarter, we were actually stymied by, in fact, some extraordinary items which really hit us. And this is about 193 crores, and that's what we actually mentioned also. This is essentially coming in from the fact that, if you recall, a few years ago, metformin was essentially a very important product for us, and there was a major recall which happened in 2020. Because of COVID and other conditions, there has been delays in actually processing or the coming back of a lot of this products. So it came back in the course of this year, and we decided it was a bit of a surprise, but we took it in. And the second part of that was essentially things relating to provisioning that we had to do for oseltamivir, Tamiflu products, acute therapy, which has not actually moved in the last couple of years because of, again, COVID conditions. People are not stepping out and the like. As a matter of abundant caution, we decided to take some provisions relating to that as well. And as you recall, in 19 and 20, oseltamivir was an important product, and we believe a lot of those, what is there in the shelves could well have expired. So as a matter of abundant caution, we've taken those, and that's the reason why we have taken those provisions. Really, it's one time you would recognize, and if it were not to be for that, you would have seen the overall EBITDA margins to have gone up to about the same levels as perhaps the last quarter.
Mm-hmm. This return of some of the drugs, especially the diabetic drug metformin, is it a one-off quarter? You may see that coming in the subsequent quarters.
It's all sealed and delivered. It's all done. There is not going to be anything of this kind in the future, at least.
Okay. And what about the Tamiflu?
Tamiflu also, so it's we've taken a very, very a good estimate of what could be the items out there. So we have taken that, and we are dusted with that as well.
Mm-hmm. Take us through where's the growth coming in from, because if I see your release, you saw good growth coming in the US, but other regions were lagging behind.
I wouldn't say that. If you compare, India has actually grown 10.4%. It's done fairly well. If you, both, from a acute therapy as well as a chronic therapy front, which is in line with, in fact, the market itself. And other regions, in a general sense, have done fairly well also. So in terms of the future, we expect, of course, things to be much better. If you look at, for example, and I think your question is more towards how it's going to turn out in the future, I would imagine. And if we talk about the next year, at least in the second half, we do expect some decent products coming in. It is essentially, we have programmed for Suprep, which will actually come in from Somerset. We also have PEG-GCSF from a biosimilar stable. We would have, in fact, towards the end of the year, Spiriva. So that we would see a rise in the overall turnover in America. We will be keeping it around the 200 mark, for the immediate future, so to speak. India would continue to do pretty well, and other markets are doing fairly well, really. So, top line, of course, has been the problem for the company in the last, a few years, so to speak. And we would see some, good growth coming in the second half. But more importantly, the portfolios, the platforms that we've been working on, would really bear fruit in the years to come, which is going to be FY24 and therefrom is essentially the entire full breadth of injectables, the inhalations portfolio, and all of that.
So if I look at your 9-month number, sales have grown by nearly 10%. You said that there is a challenge in terms of growing your top line. What is the kind of growth expectation you have for FY22 and FY23?
I just mentioned that, so if you're talking about the past, there have been, of course, certain areas which are bogged down. Essentially, if you talk about the API, SPUs, has actually, had a tough time in the last year and a half, essentially because acute therapy products are not selling in any part of the globe, cephalosporins especially. So for that, there was actually an erosion of overall, numbers out there. Last year was a little difficult year for India region itself, and this is true for the rest of the, for the competition as well, except for those people who really had a COVID portfolio to bring to market. Last year we brought in albuterol, but in the general sense, we also had a problem because of OAI on a lot of our facilities. And whilst it continues to some of those, at least Goa is out of that. We have a pipeline close to about 109 products, of which 23, 24 come from Goa, and you would see some good some of these products getting approvals in the quarters to come from Goa. So you would see some a blip in that. But as I just mentioned, the mainstay for next year would be potentially three products, which is Suprep, Spiriva, and PEG-GCSF itself, which will be perhaps to the second half of next year.
So is it fair to say that you will be looking at this top line growth of upwards of 15% in FY23?
FY23, it would be good. It would be growth for sure coming in from the products that I spoke about, and of course, secular growth across other regions. And the API, I don't think these conditions are going to last out for too long. I would expect, in fact, these conditions to recede and the growth to kind of settle back in the API. So there will be growth in FY23. But as you would recognize, it's still early days. But FY24 is when you think we would be unleashing the potential of a lot of our the portfolio that I just spoke about. So FY24 would certainly be much better than FY23. But 23 in a general sense would be better than FY22 for sure.
So you have a run rate of 10% of revenues. So is it fair to say that it will be upwards of 10% for FY22, and FY23 it would be between 10 to 15%, and then the good kicker comes in FY24?
Yes, that's what I said. FY24 would certainly be much better than FY23.
I'm trying numbers there to get some idea on the kind of
10 to 12% is what I would expect, in fact, for FY23.
10 to 12%.
Yeah.
Okay. What about the margins? Because we saw some compression in margins, and I know there was Extraordinaries which there. But do you see margins going back to around 20%
That's the endeavor, and that's the target for sure. We have been we've been stymied by quite a few things in the recent past. One is, of course, the top line has not really moved in the US, which is the most important geography for us. That is because of a host of reasons, including EOA and our facilities and the like. As I was telling you, we are working on those, and we would have top line growth out there. But more importantly, a host of things that which cause the margins to move, which is essentially the top line for sure, and then of course the expenses front. We have actually invested ahead of the curve when it comes to, in fact, manufacturing facilities, sales promotion, the SG&A expense and the like. And there's a lot of scope for optimizing on all of those. Plus, of course, some of these inefficiencies that have crept into the system itself, and some some bad luck in terms of a few recalls and the like. So all of this will stabilize and will cause the overall margins to certainly improve in the quarters to come. But I don't expect anything to happen in the next couple of quarters because these initiatives are still ongoing. But I do think it will move the needle perhaps after that. So second half of next year would be certainly better than the first half for sure.
Okay. What about the OAIs which are there? When do you think those will get sorted? I know Goa has come out of it, but what about others?
That's a good question. So they've been there for the last few years, so to speak. Mandideep doesn't matter so much because there is, of course, no products coming in from there. But Tarapur and Pithampur, we believe that we're in a state of preparedness. So it is really up to the FDA to come over and audit, and we are fairly confident about about success there as we were with Goa. Somerset, of course, is a little bit, I think it is something that will get also audited over the next, several quarters. And we are working on that. With the recent audit, there were some observations. But for sure, in India, we think that we should be in a position to get those OAIs removed when the audit actually takes place.
Do we have a timeline for
It's
the
difficult
FDA to come and inspect?
it's difficult to state when they would be coming over. It's really up to them.
Okay. So, but you expect in FY22 some visits to happen.
There's always an expectation, but it's really up to them.
Okay. What about your US portfolio? It's been the driver for your growth. Which are the other products which can push this growth there? And since there is a handicap with respect to some of the plants, how do you plan to push that?
I just mentioned this, right? When it comes to OAIs, we are working on those. Goa has just got the reprieve. So we got about 23 products lined up from Goa. It's a question of time before a lot of those approvals start clicking in from Goa. In a general sense, Lupin's is working on the highest number of platforms across various therapy areas, so to speak, which includes the entire a range of products when it comes to respiratory. We have, in fact, a cashier of products from a complex injectables front, and of course on the biosimilars as well. So and each of this we talk about the next 3 to 4 years, they would become fairly decent numbers. Well above 200 to 250 million dollars on each of those fronts, so to speak. Which will actually contribute to a growth in the long term. So I think whilst the short term there are there are reasons why there has been some bit of volatility, and you could expect this to continue for the next couple of quarters, 2 to 3 quarters. The medium term is certainly looking pretty good for us.
Okay, Ramesh, it's been a pleasure talking to you today. Thank you very much for joining us on BloombergQuint.
Thank you very much. It's my pleasure too.
Thank you.